All right, let's get going. Let's have some fun. Hey, good morning. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hi, my name is Wayne. I'm a currency trader. I'll be your guide through today's strategy session. We do this every single day, Monday through Thursday, 7:30 in the morning, and every Friday at FX Street at 7:30 in the morning. How nice. Today's event is held by Forex.Today. Go to Forex.Today. Somebody said they were trying to go to Forex.Today.com. I'm like, well, why would you do that? And, well, how do you get there without the .com? No, it's just Forex.Today. So that's what you do, Forex.Today. You can attend these events and get all our analysis, interact with the community chat, and all kinds of other things, special events, for example. And today we have a special event. We're going to do the FOMC interest rate decision together live as a community. How nice, huh? So I'll spend a half an hour. I'll teach you everything you need to know about the FOMC, the Federal Reserve Banking System of the United States, the Board of Governors, what happens at these meetings, who says what, that kind of thing. Then we have the announcement at 2. Boom! Market's going to move. And then we'll have some volatility for a while. But the real event of the day is actually at 2:30, and that's the press conference. So not a boring day at all, which would be a nice name for a boat, wouldn't it? Yeah, maybe not. It'd be a terrible name, Wayne. All right. So maybe we'll do some technical analysis. Been a frustrating day so far. Fine. Let me zoom in. What's that doing over here? You reboot your computer and all of a sudden your toolbar's in a different place. It's like the resolution's off too. Strangest day today, man. Is the resolution on this all right? All right, whatever. I don't care anymore. Hang on. I want to get my drawing tool. All right. A funny thing happened to me while trading currencies yesterday. I bought it here. Jammed my stop within. I think I jammed my stop. One of those things, right? So I'm long about here. Stops here. Don't you love that? Don't you just love that in currency trading? Yeah, so it came up and boom, knocked me out and then did it. How fun, huh? But I'm sure it's happened to you. It's not just me. It happens every so often, right? Part of currency trading. Or am I the first one that's ever happened to? Yeah, but that's trading for you, right? Oh well, too bad. So sad. Yeah, so anyways, this is USD CAD if you hadn't caught it. And I believe it started off the 4-hour, is that right? Oh yeah, that's it. So, I don't know, just a lame play on my part or something. But pretty straightforward scenario, right? I bought it off here. Right? 1, 2, 3. Yeah, that's, yep. It was, yeah, so I would have actually been in about here, and then it did that, came back, and then, yeah. Oh well, but you get the idea. Just, my radical plan, right? I bought a dip off the 21. I call that like a mean reversion. CV. Is that Cliff by any chance? Holy smokes! Where have you been, Cliff? I mean, how many CVs do I know out of the 10 years that I've been coaching Forex and out of the, 50,000 people? Yeah, that's Cliff, huh? Where you been? It's been a while, hasn't it, brother? Calling sick today, huh? Yeah. Well, glad you're alive. So anyway, so there's the move on USD CAD. And I'm primarily a trend trader, so it's not a big deal. It's just too bad it worked out the way it worked out. But you could see in the past, very recently, we had something similar back to the 21, back to the 21, right? You can even see back here, there's an old plan back to the 21, take it north. Cool. Okay, pretty straightforward stuff though. So it came back to the 21, and then it went into a smaller time frame. And let's see if it even looks, no, I can't remember the scenario. Let's see, it was in here. I don't know, whatever. It made sense at the time. You had to be there. Okay, let's, what do you want to look at? We haven't looked at Euro USD in a long time. Sembo says, do I think there's a triple top? No, it's going to go up forever. No, obviously I'm being facetious, but there is a lesson in there. It's going to go up until it reverses. So is it going to reverse here? Not my bag, baby. All right. Oops. Oh, I hate that. What kind of idiot puts that right next to the zoom? I got to get rid of that. No, I messed up my whole entire layup. Man, one of those days. So, all right, let's put this together. Okay, here's the disappointing move. Here's the Fibonacci retracement. Okay, up to the reversal pivot, and guess what it did? It reversed. Isn't that funny? So let me ask you, do professional traders use monthly pivot points? Can you see that it didn't go one pip beyond? Isn't that interesting? So maybe write it down just for, reprogramming your brain or something, right? I mean, do professional traders use monthly pivot points? Okay, there's the top of the week. Okay, we knew that back here, or top of the month, I should say. We knew that down here. Actually, right after this big move, I actually said 110.50. Because I'm eyeballing that, right? And I remember it too because in this big event, in the big move, we had a live audience going and somebody said 110 and I'm like, why would you say 110? Besides the psychological level, The real resistance is at 110.50. I remember saying that. And it's the monthly. So anyways, I think that's pretty cool. So if M4 is your top, what is the bottom supposed to be if you're using pivot point theory? M2. Yeah, so the textbooks, right? The textbooks actually say if this is your bottom, the predicted top is there, and that's it. That's the whole range, right? If this is your bottom, this is your top. I think that's just wondrously fabulous. So now we got our big event, and you know, the Fed raising interest rates, or not raising interest rates, or maybe raising interest rates more than we thought. Whatever. Today's event could move the dollar, right? But the textbook moves have taken place, which I think is pretty interesting. So are we going to end today at 1? Are we going to, 24 hours from now, will we touch 103? What do you think? So why would it drop from 109 to 103? See, to get that to move that far, you're going to need new money. Okay? So what's going to bring the new money in, right? And it would have to be that we learn that they're going to raise rates faster than the market thought. And we have to now price that in. Now, Cliff CV says interest rate hike. Well, we already know that. It's already priced in. Right? So what don't we know? And I think what's more plausible is that we resume, and that's what we had talked about earlier, that we just resume the downtrend. The daily Stokes looks ready. We're kicking off resistance. It's, the other thing that I had marked out for you guys, and this was days ago, but, things like roll reversals. I mean, it's all there, right? So if things go planned, we just resume direction. Okay. And the direction could last for a while because the Fed is likely to slowly but steadily increase the interest rate. Right? And the ECB could continue a monetary policy that would weaken the euro, right? So this could continue for quite some time. So I don't think it should be a quick move. It could do anything it wants. The velocity I can't really tell you about. But, the central banking divergence and all that stuff has been going on all year. But look when the big move was. Right? Taper at the top. Then the quantitative easing. And then really sideways action since March, really. Breakthrough, pop, maybe some resumption, huh? Maybe a nice little move, nice little breakout, fine. Warren says, how do you think they will raise it today? Do you mean by how much? Or how? I know exactly the mechanism how they raise interest rates. So I'm not sure the question. Yeah, by how much they'll raise it by? A quarter point. So what we've discussed in the past is that they raise interest rates every other meeting. There's 8 meetings, so if every other meeting they raise a quarter point, then at the end of 1 year, interest rates will be 1%. Right? If you want to, like, and of course that's nothing but a guess, right? If you want to get into it, you can ask what the professionals are pricing in, and they'll price it in the January, March, right? April, June, July, September, November. They have all the meetings priced already. Of course, these changes we get more information, but you could use the Fed Fund futures market because they're already pricing these things in. It's their job. So it's not a guess, it's actual money. Right? So go to the CMEgroup.com and look at the Fed Fund futures market. Yeah. And if you want a detailed explanation on what all this means and how it's done and all that kind of stuff, just go on Forex.Today and Google, or search, I should say, Fed Fund futures. And I did a video on that to teach you how to use the spread between the different months in price and what it all means and all that kind of stuff. It's all been done there. It's all on the website for you. So anyways, yeah, I would just like to simply see continue mission, sort of the thing. Just more of the same. But I don't think we need sort of an increase in velocity. I think it's all pretty much, steady Freddy. Okay? I mean, it looks like the 5 and the 8 are crossing, right? That's why we're looking at the Stokes. The pig is Oscar Mike again. That's it, only 1.1 trillion. Okay. Try to figure out which one we had this planned out on. This is a 15-minute chart. And so we did this, just yesterday, right? So I predicted it would go down to here, right? Hang on. My prediction yesterday is that we would go to here, right? So I measured from the top to the neckline, dragged it from here, and predicted here, right? Are you guys there? So we had this pattern which I was designing as a head and shoulders. And it predicted a move in this area. And then I said what you do is you measure the distance from here to here, project it from the neckline, and that put me here. So this whole area is the zone to take profit. Isn't that cool? We did this yesterday. No, I know it was yesterday. Way back yesterday. Cool, right? Ben's up 160 pips. Well, congratulations, Ben. Neat, right? Just a heads up, the psychological level of 1.5000000000 is an important one. It just is on the pig. Right? Just, you know, when you get in this area, it's going to fight. Okay, I mean, look at some of these changes, right? Changes of direction and stuff. I mean, pretty important stuff. This whole area that we're in. To give you the picture. So, how about a CAD yen? You might not be watching that. Okay, CAD yen. You see the 4 hour? I know it's in a weird spot, but I'm looking at this right here. Seems like if it wanted to fall, it would fall, right? So see this? Ride the 5. This is a 5 EMA mean reversion. So that would be continued CAD weakness. Okay. Once, you know, today we obviously have event risk, so this could do whatever it wants to do. But technically speaking, that's pretty bearish, this setup here. Okay. Now, what if you were a bull, though? Okay. I want to start, I just want to reaffirm the bearish part. This is a 5 EMA and a downtrend. Right? So a bear would simply sell there. Right? But what about a bull? Let's say you were just a bull, whatever, for whatever reason. You're going to play this as a bottom. Then you play this out as a top. So it's a breakout scenario for you. So you better look for a proper level of support or you know, but somewhere in there you might have this fibbed or something. Right? Let's say maybe, come on. Like, you might be playing it like that, if that makes sense. Cool. YJ is going 200 kilometers an hour, and he's in the webinar. Cool. $260 kilometers an hour. Wow. It's amazing. If I drive my car past trees, I lose cell reception. You can go 260 kilometers an hour and attend webinars on your phone. Yeah, awesome. All right. So, are you bored with oil yet? Suppose we got to get rid of this fib extension. Look how easy that one was. Yeah, you're welcome. All right, let's zoom in. So, interesting things are happening technically, right? The sweat of your body covers me. Can you, my darling? Can you picture bliss? Yeah, so we can call this a daily R2. I'm just going to call it $39 a barrel. But technically, things are interesting up in here, right? Just in the last couple of days. So we get way down the 35 area, right? Dramatic increase, fib retracement, extension with a lot of consolidation, a lot of worry. Okay. So right there, I think what it's trying to show us is that it needs the new news, right? Now, if you measure here to here, it fell too much to have a breakout to the upside. It wasn't supposed to fall that far, right? It was supposed to do, this kind of thing. But does that mean it's coming down? There's nothing technical to say it's coming down. But if you were going to resell it, I could see what you're doing. You're pretty aggressive, and it's not a good setup. But I think it'd be interesting if that happened. And it feels like, and by feel I mean, emotion, right? I think it would be more like a move like that, my guess. But the only thing technical that's here is that this pullback was essentially 100%. And that leads to either consolidation or reversal a lot of the time. And if you were a dum-dum and all you did was trade in the direction of a long-term trend blindly, even if they were bad trades, you're still more likely to do better than worse than if you were betting against the trend, right? So even if it was a dumb trade and you shorted this just because it's been in a downtrend, you're probably still relatively okay. At least risk-wise, right? You could probably get lucky and a dumb trade would at least not lose money, right? To the upside, you would ask, well, what would move this up? These moving averages are almost sideways. If you drew a MACD, MACD would be low and flat. It's just not exciting to the upside. But does that make you want to sell it? Probably not, right? But whatever. So really neutral, but I think there could still be some bear side on that. So Noki, you guys trade Norwegian krone? I gave this to a while ago as an alternative to trading CAD. And you might want to watch Brent crude versus WTI if you're going to trade Noki. Just a little heads up. What else should we look at? S&P 500. Okay, nice little break. Makes me feel good. And remember, we identified a couple of levels of support in which I might be interested in buying back into the trend. You guys remember doing that? Actually, I did 3 levels. Right? Does anyone remember doing this? I remember talking about how more people make money on the way up than on the way down, and therefore there's going to be a built-in, wind. So if you're worried about the stock market falling significantly, or you're watching it fall significantly, or you're a bull, you want to be a bull, but it's in a bearish technical trend, which it was doing back in here. It's pretty simple. Just pick your lines, right? Find your next levels of support and wait for it. So is it bullish now? No, I wouldn't say it was bullish. If it was going to roll over, it's going to roll over pretty soon and work its way down. But that's a pretty nice place for it to pop, right? Keep in mind it's a psychological level too. Alexander says if they raise interest rates, the S&P 500 should drop, right? Why? Right? Why? No, but remember, is it really rates that would kill the stock market? Like rates going up, does that really kill the stock market? Now, it might change, and one of the things we did talk about on this way down is that before it was absolutely totally clear the Fed was going to raise interest rates, there was a lot of debate, right? Oops, I guess I shouldn't do that. But when it was finally clear they were going to raise, portfolio managers had to rebalance what they invested in. See, over the years, when there were 0 interest rates, they would have invested into companies that would have benefited most from it. But then, if we look like we're in a new cycle of the Fed raising interest rates and likely to continue to raise interest rates for years, then it would be time for them to get out of some of those trades and into new positions that would benefit from the rise. So, for example, banks would probably benefit from a slow and steady increase in interest rates since they make their money by charging people interest rates, right? So you might want to get out of some things and into others and just kind of rebalance everything, because the next 5 years are going to be a lot different than the previous 5 years. So sometimes you get the stock market coming down, but it's not like everyone is leaving the stock market. They're just getting out of some trades, going to cash, and then buying into new positions, going back into stock, right? It's similar to how I was showing you that the Euro USD spiked 500 pips, but nobody bought it. I look at this and I see the S&P 500 falling, but nobody's selling it. You get it? They're just taking profit on some of the positions, but they're going to buy other things. right? So down for a while, up for a while. Why did that happen? They reinvested the cash. But like, if you're an investor, what else are you going to do that has equal risk, right? Buy the Spanish stock market? Well, that might have higher risk associated with it, right? So I have a feeling a lot of money is still flowing to the U.S. Also, did anyone attend the event I did not long ago about junk bonds? It might have been Monday, so 2 days ago. Junk bonds. In particular, junk bond ETFs. Now, what the interesting part of junk bond ETFs is that any idiot, and by idiot I mean us, retail investors, any idiot can just buy a junk bond ETF. Hey, I want to get in the junk bond. Sorry, high yield. I want to get into high yield, right? Why do you want to get into high yield? Well, your bonds are not paying you any interest, right? Your bank account's not paying you any interest. And you think bonds are basically safe, right? The world's biggest financial misunderstanding, right? The bonds are risk-free. Stocks are risky, but bonds are safe. So anyway, so anyone, you don't even have to be an expert. All you need is money. Anyone could buy a high yield ETF, for example, and you're looking at it and it's like, wow, it's paying me 6%. And my bank is only paying me 0%. So you get into that. And, well, those funds are now losing money big time because there's a change in risk and all that kind of stuff. So money's getting out of junk bonds now. And people are discovering that they're actually having some capital losses. Yes, they're getting paid high yield, but what kind of companies are issuing high yield junk bonds? Well, I gave an example of oil exploration companies. And how are they doing now? With oil at like $30 a barrel. Yeah, they're not paying these back, right? So there's some losses, and inexperienced investors are starting to feel that. But people are getting out of junk bonds so fast that like 3 major junk bond funds have actually gone out of business just in the last month, right? So anyways, there's a lot of money coming out of junk bonds. Where is it going to go? How about just the S&P 500, right? Right, you don't want to be in any bonds, right? How does the Fed raise interest rates? They sell bonds. Oh, snap. So you're holding bonds, let's say in your portfolio, and the Fed comes in and starts selling billions of dollars worth of bonds. What happens to bond prices if there's a sell-off? Bond prices fall. You see why like junk bonds are starting to fall? People are getting out. The Fed's going to come in and raise interest rates by selling bonds, and oh snap. So if people start getting out of bonds, but bear in mind this capital loss, meaning the price. You might still get your 5% yield on a bond right? I don't know who would give you 5%, but let's say let's say 3%. Let's say you bought a Ford corporate bond and it was paying you 3%. You're still going to collect your 3%, but your bond is going to lose value, the price, if you had to sell it in the open market, right? Oh, what is a bond? Oh, your last name is Bond. Really? I know some bonds. Yeah. A bond is a loan to a company or a government. Okay? So if you buy a bond, you're actually loaning money. So let's say Ford Motor Company issues a bond. It says, I will pay you 5%. Couple of times a year you'll get a payment that will equal 5% annually. At the end of 5 years, I will give you all your money back. Okay? And you're like, okay, I'll loan you the money, Ford. But you say, well, I have to charge you an interest rate higher than a risk-free interest rate. So a risk-free bond now would be loaning the government. You can loan the U.S. government or any government, you can loan them money. So a risk-free investment would be loaning the government money. You would do that by buying a government treasury. So to loan Ford, you'd have to say, well, Ford, you're a little riskier than the U.S. government. So I'm going to have to ask you to pay me a higher interest rate than what the government's offering me, because you have a little more risk. If the government gets into financial trouble, they could actually just raise taxes, right? Right? They can do it. They can force you. It's the law. Ford Motor Company can't force you to buy a Ford Focus. So what if something goes wrong, right? One day one day you'll own Volkswagen stock, and the next day, uh-oh. So there's some risk associated with these, right? So you're going to have to charge them a higher interest rate. And then some unknown company or a company with a sketchy track record will have even higher risk, and then you'll require a higher interest rate, whether they pay it or not. But you don't have to buy it. So anyways, that's what a bond is. When you own a stock, you're not loaning the company money. You're buying into that company. You're a part owner. Right? You have unlimited upside, and your downside risk is the cost of your money. If the company goes out of business or gets sued or something like that, you are not liable. So like if you own the stock and the company goes bankrupt and the value of the stock goes to zero, well, you lost the money that you invested in the company. But then in bankruptcy court, the people that are owed money, like a bondholder now, they can't sue you and say, well, I didn't get my money back and you're an owner, so you owe me, right? So there's some interesting things about stockholders and the things that you get for owning stock versus a bondholder. A bondholder doesn't get unlimited upside. They just get their money plus interest. Okay? So it's kind of interesting to loan governments or loan corporations money. I think it's kind of an interesting business. So, do you want to loan Japan money? Yeah, YJ's getting off at Tokyo, so we can talk about Japan. He's almost gone. See you later, YJ. All right, so do you guys want to loan Japan money? they're paying 0%. Yeah, actually, you want to borrow it, right? Right. So there's net outflows in Japan. Okay. So the higher the yield, the more you want to, right? The higher the yield, the more you want to lend. The lower the yield, the more you want to borrow. So you can take this idea of interest rates and bonds and all this kind of stuff, apply it to the global market, and get a general idea of where the money wants to flow. Okay, and that kind of analysis is long term. So it's generally true. It doesn't have to be true today or this week or even this month, but on the long course of things, it's pretty correct. Wow, messy chart. Okay, there's the triple bottom at 120. And now we stabilize. Okay. The fact that we made it above here is pretty bullish. So the way I see it right now is we're stuck in a range like that. Okay. And if you want to trade it like a giant inverse head and shoulders, you know, you would just change the time frame. Wow. Doing a terrible job of this. My mouse is so fancy. I can't draw these things. It's hard to draw 45-degree angles, but okay. But we'll see. There's a lot of built-in risk here. It wants to go there, maybe? So I think we're going to learn a lot this afternoon. I can't tell you the outcome because I don't know how institutional investors and even central banks have positioned themselves for today's interest rate hike. Yes, I've been at lots of Fed meetings where they've raised interest rates. But never after quantitative easing, never after, you know, an 8 or 9 year period of stagflation. It's kind of interesting. This is one for the textbooks. So Japan was the one that invented quantitative easing. And let's be honest, it hasn't worked so well for them. The United States went in a lot more aggressively, and America, that's always been America's strength. Once they realize there's something wrong, they take the bitter medicine. They just swallow it down, fix the problem, and move on. Now, they might forget the history very quickly, but you know, that's how the Americans handled their financial crisis, and they're already out. Japan's been in the same financial crisis for 20 years, and Europe is still Europe, right? They drink, they smoke, they talk, but very slow to react, right? So we'll see what happens. You know, we haven't had a divergence like this in a long time, so I don't know the reaction. But the world has had a very long time to prepare, so they should be prepared. There shouldn't be any panic. My actual guess is not a lot will happen, but a lot could happen. And that's why we need to be there and be prepared, right? The United States didn't do the negative deposit rate that Europe has done. The Fed made a clear decision not to do that because that hasn't really been done either. That's also a very new central banking idea of a negative deposit rate to try to, increase money supply and by affecting the monetary base. So the Fed doesn't have that. They decided not to because it really hadn't been done before. So to protect that, they actually started paying interest rates on deposits. Okay, so the ECB, they've done some quantitative easing, not much, and they're also doing the negative deposit thing. So we'll see if that helps. But I don't know. But the rest is the commodity crash is slowing down global inflation. It's hurting commodity currencies. So I don't know. It's just a very interesting time to be a currency trader. But I do feel like there's a shift in the wind. I think things are changing. Right? Canada did very well for a very long time, and Australia tanked. Well, Canada's tanking now, and Australia looks like it's finding some stability. Interesting. I mean, that's cool, right? British pound, still has some downside to go, perhaps, but might be, over the next couple of years, could be a lot stronger. I think we'll be at 170 before we'll see 130 on the Great British Pound, right? And the yen's moved sideways all year. Is today, is this last move to 120? Was that the bottom? Very much could be, right? So the yens could probably start to move pretty soon. So this is nice. I mean, at the very least, we've had the dollar strengthen for a year or more really more than that since the taper, because the taper is less quantitative easing and less bearishness, which means the beginning of bullishness. And then it got ripper strong on this idea that the Fed was going to raise interest rates. Now, they were front-running that way too soon, and they were long dollar way too early. But today is the beginning of the day, or the new period of actually raising interest rates. Cool. So I think that's bullish for the U.S. dollar, but it doesn't mean the euro dollar has to fall today, right? I got to pick my lines. But the beginning of a new long policy, that's cool. Slow and steady in Forex is what you want. Okay? And then we'll have to start talking about, changes in the monetary base, and will it go to the money supply, and how do we increase the velocity of money? These are other big things that central bankers are talking about. But today's the beginning. If they raise interest rates, the beginning of something new, and that is usually a good opportunity to profit on the long run. So I'm looking forward to it. So hopefully I'll see you at the event. I'll send out an email. Is everybody registered for that? Everybody? Forex.Today / December Fed meeting. Okay. So cool. Peace on earth. May the pips be with you. May your profits be above average. And I'll start at 1:30 p.m. Eastern Time. Take care, everyone. Cheers.